Hello, today's the title of the video is how can a rational trader make a decision in an irrational market? That's a very interesting question. That question has been asked to me by a TSCW SYS008 trader. How can a trader make a decision, a rational trader make a decision in an irrational market, all right? So this week, talking about this week, the week that has ended, that will be ending tomorrow, all right? This week of August 2019, you can see that a lot of market participants that were trading, for instance, in the stock market, will be thinking that the market was irrational, all right? The market was irrational. One day is up, another day is down. Another day is went up big time, another day it goes down big time, and then people do not know what's happening. And it may look sometimes like the market is irrational. Very often, the market is rational. All right, I would say more than 70% of the time, the market is rational. But there are times when the market can become a little bit irrational. So we want to understand what is irrational market first, and also what is a rational market participant or a trader. So I want to put that question to traders today. Did you think that the market was irrational this week? So I believe a lot of market participants will say that the market this week was irrational. But the market was not irrational, and I will prove it to you in this tutorial that this week the market was not irrational. In fact, as I said it before, more than 70% of the time the market is rational. Why? Because the market is always trying to correct distortions. Naturally, the market does not like distortions. So anytime there is a distortion, the market will correct it. And sometimes when those corrections are taking place, people will say that the market is irrational because they don't understand what is happening, and they will call it market is irrational. Another thing that I would say to traders, sometimes a market participant will think that the market is irrational just because that market participant do not understand what is taking place. All right, so this is why we see sometimes as an earlier way trader, we may see a specific pattern that is in place. For instance, when we are talking about a WSY wave, so we see the W, we are expecting the S wave, but when the S wave is being formed, people will be thinking that it's a trend, but it's a false trend, it's a fake trend. And then the people are surprised, but a lot of earlier way traders are aware of it, that this is normal. Another example that I will say to traders, giving an example of what market participants sometimes call irrational market, is when we see, a truncated market, where we have a truncation. The truncation is a earlier wave term when the fifth wave will fail to go above, the third wave. So generally, most market participants are expecting the price to go up more, to be more bullish in an uptrend or to be more bearish in a downtrend. And when a truncation is taking place, most market participants will think that the market is irrational. All right. So there are many examples that I can give traders that will to demonstrate that more than 70% of the time the market is irrational. All right. Just understand that. But there are times also when the market is irrational. The common example is when we see, a sharp correction. Now, a sharp correction in itself is not an irrational market, but in fact is a distortion that is correcting previous distortion. Now, I don't want a video to be too long. What we have, so suppose your room is dirty, you are not cleaning it, all right? And you haven't cleaned your room for 3 months, all right? That's too bad, isn't it? So if you haven't cleaned it for 3 months, suppose you haven't cleaned it at all for 6 months, Now, if you didn't clean it for the whole year, and that would be complete mess. So sometimes the same thing happens in the financial market when we have accumulation of a distortion, all right? Very tiny irrational behavior. For instance, somebody selling a financial instrument that is not overbought. It's an irrational attitude. Or somebody buying a financial instrument that is overbought. Because stochastic is overbought, stochastic oversold, people buying and selling. If you are scalping and doing all kind of speculative activity, it's an irrational habit, all right? But you may not think of it, but if more and more people are doing it over the year, that those tiny irrational market or attitude or behavior can become very big, and one day we may see something that may look like irrational out of the blue when people are expecting an impulse move, probably going up or down, and then suddenly we see a sharp correction, and everybody asking, where is this one coming from? Well, it's in a pudding. All right, it's in a pudding. All right, so what is an irrational market? So, an irrational market is a market where the price is distorted. All right, so financial instrument uh, that is overbought is still going up, though it's well overbought. Technically, fundamentally speaking, it's overbought, but people continue to buy it without any care, like a crazy market participant. Okay, that's a one irrational market. The irrational market is not good for rational market participants. In fact, it's dangerous for all market participants because it can make somebody who make excellent decision lose. So you may be correct, you may be right, you may pinpoint excellent trading signal, all right, buy. But when a market is irrational, you may end up losing. You may see the setup, you may apply a top-down trading method, you may do everything correctly, and then you end up losing. That's an irrational market where those that were correct were losing, and those who were completely wrong are still winning. That's a typical example of irrational market. Most importantly, during the irrational market, you see a lot of distortions talking about the price, the asset price being distorted. So people don't, not only that, one is not even able to determine the fair value during that time because it creates a confusion to the point that even rational market participants are not able to determine the current fair value. It's an irrational market. And you see all kind of irrational uh, market participants selling when they're supposed to buy, buying when they're supposed to sell, all right, holding position when they're supposed to divest, all right, paying a crazy price for asset that is something that's supposed, a stock that they should buy at $50. They are quite happy to buy at $200. Can you believe that? They know that the thing doesn't have that quality, right? It doesn't have the same quality. It's like somebody selling you, onion for $100, one onion for $100. That's not a correct fact. But during an irrational market, you see people very, very enthusiastic to buy at that price. All right, this was going on during the irrational market. People are prepared to pay expensive price for stocks that are completely useless, and everybody's happy about it because that's the current market environment, a crazy market environment. All right. So I think I try to explain to you what is an irrational market. The common denominator of all irrational market is the distortion of the price as asset price. Okay. So what is a rational trader? All right. A rational trader is a trader that is always trading the price. A trader that is also able to recognize the irrational market. So a trader cannot call himself or herself a rational trader if he or she does not know what is irrational or irrational market. It's almost impossible. Now, that's why recently I've been talking about the market principles. Most of the rational market participants or traders work with market principle, and they stick to that, and it saves them all kind of trouble. And they try to hold on to that, because when there is a complexity, you want to work with the truth, and the truth will set you free. And the market principle are the truth that will set you free. So a rational market participant will work with the market truth: buy low, sell high. All right. There is always a rotation of sectors. This is the fact. All right. Central bank influence the economy. All right. Economy news can affect stocks. Very important. Market sentiment will determine the time when people will sell and buy. A stock can be overbought, but when people, if the market sentiment is still bullish, it's not going to come down. That's why we have for India we're trading the wave extension. So they say it's overbought. Yes, we know it's overbought, but the market sentiment has not changed yet. So the market sentiment will determine the time when one should be willing to sell. That's why we say to traders, use the trading triangle. If the S&P 500 is very, very bearish that day, don't be busy buying stocks that day. Buy stocks when the market is bullish. Everybody is talking about it in the paper and the newspaper. There will be the crowd trying to buy that day. So your strategy will be to concentrate on your bullish watch list that particular day, because the market is bullish. All right? Okay? And when the market is bearish, like yesterday, you want to concentrate on your bearish watch list. All right? So this is it. What is an irrational market? What is a rational trader? A rational trader will work with market principle. And not only that, we'll understand what is a rational market and what is an irrational market. So I know what you are thinking. See, George, the question was, how can a rational trader make decision in an irrational market? All right, this is it. So, and when we very simple principle that I talk about all the time, and I just mentioned just now, is that when there is a complexity, when things become too complex, you look for something that is true. All right. So it's all not all over the place. You want to see the head and the tail. And once you know where is the head and where is, you remember when you have like your wires, they all mess up all together. You don't know where is what. You just need to find where is the head and where is the tail of that wire. And then from there, you pulling it out. You want to pull it out of the mess. So how do we do that? A rational trader in an irrational market must work with the truth. That's it. The light to see in the darkness. An irrational market is a dark market. It's just completely dark. No one knows what's going on. It's a darkness, no light. You want to work with the truth. The market principles. That's the light. The truth that in a financial market. That's why you want to work with. That's it. So you want to work with those truths, and one of those truths, which I've been talking about for years, are the market patterns. This is it. The market pattern will determine the appropriate strategy that a trader or an investor must deploy. If the market is irrational, you want to pay attention to the market patterns. So if you know that the market is irrational, but you want to trade, you know that it's risky. The environment is not suitable. Because you are a rational trader, you know it, you will be very, very cautious, or you may be using hedging strategies. Oh, I don't trust this market. I will hedge this position. I must hedge my position. It's a crazy out there. Or I will come out completely. I will take a small loss. If I hold on to my position, I may lose because it's an irrational market. So this is it. You will work with the truth, the market principle, and with that you will make excellent decision because you understand that it's an irrational market. But if you are not a rational trader, you will not know that it's an irrational market. So a rational trader will definitely understand it's an irrational market and therefore must take the right decision. Stick to the correct decision, which means during an irrational market, one must be very, very defensive. Second thing, a rational trader must not have many positions open when the market is irrational. So two things you need to take away from this tutorial. A rational trader that is trading during an irrational market must be very, very defensive. Very, very defensive in the proper sense of the word defensive in 360-degree defensive. So, which means your first priority is not to make money, but your first priority is not to lose. This is being defensive. So, being defensive in the proper sense of the word, you come into the market and say, I'm not here to give away my money. That's it. So, instead of saying by greed, I say, your first priority is to make money. Yes, your first priority is to make money. Now, you can lose money also. Therefore, you need to be defensive. So a rational trader must be very, very defensive in an irrational market because he or she is a rational trader. He understands that the market is irrational, therefore must take the appropriate decisions. All right? Okay? The second thing that a rational trader will do when he or she knows that the market is irrational is that the rational trader must not have many positions open. So it's coming back to the same thing that I said before, the defensiveness. You want to have a few positions open, you want to divest, you want to prune your position, you want to hedge your position, you want to have defensive measures in place. All right, this is how you will. So I can give you another example. All right, talking about rational and irrational trader. Okay, so generally speaking, the hedge funds, all right, the smart money, the highly sophisticated market participant, they consider this is it. They consider the retail traders as the dump money, all right, which means they are not rational. All right, if you accept that. So therefore, when, for instance, the investment bank or the hedge funds are taking position, all right, they always take defensive measures, in fact, what are called protective measures, all right, to protect their position because they have a position millions of dollars, millions of pounds. Therefore, they take defensive measures, all right, to protect their position because they think that the crowd is always irrational and they don't want to work with them. The next thing, the best, okay, investment bank or hedge fund work with the market principle, and they will stick to that all the time. All right. So this is it. Being defensive, and when you know that the market is irrational, don't expose yourself too much. This is it. This is the best approach. So for an individual trader or a retail trader, how can you apply that? You know that like this week, I said to trader on Tuesday, did you watch that video? At 2-4 India Wave on Tuesday, I posted a video and we were talking about how to count internal wave. Those are my drawing on Tuesday. And I was telling traders that this week we have the G7 in France. And very often the market is very, very funny, all right? And it can go down. So I was telling you that the power was here. So we were saying A, B, C, flat correction. Now, normally in the rational market, we should buy, and people bought it. It went up, you see. It went up. You buy it, it went up. Okay? At the end of the C wave of the flat correction, I was telling them, be careful. Because of the G7 in France, with the experience that I had in the past, all right, okay, the market can come back down. I was telling them it can come back down here, this red line here. Look, the market went down yesterday 600 points. This is the Dow Jones. It just went down the whole day here. Was the irrational market yesterday? No, not at all. It wasn't. This is what we are talking about. So sometimes people think that it's an irrational market, but it's not. All right? But the only people in the market that will know that it's not irrational are the people that are rational themselves. So a rational trader will know whether the market is irrational or not. So how do you know? You start learning about the market principles. The principle that the market itself is not violating. The market will correct the distortion. distortion that stay in place for a long time will be dealt with in the shape of a sharp correction, very important, all right? And there is also what we call the return to the mean. And the market does not violate its own pattern. So what I was telling you that is the market rational this week. So this is it. When we were playing with what we call the speculative Elliott count on the 3 minute time frame this week, when I was posting all this tutorial on the 3 minute time frame, uh, I was referring traders all the time to the market pattern on the 4 hour time frame. If you watch that video, you say, yes, George, you said it. I was telling traders that the prime is in a consolidation. Can you see here? You see this green line? This is what I was telling traders. That the market pattern will determine the appropriate strategy that we will do. So all the Dow Jones were doing on the 4 hour time frame, it went up to that resistance there. It came back to this support level. Okay. And this week we were somewhere here. So I was saying that it's headed to this point. That's why it came off on Thursday. So from this low, it went up there. So it was normal on Friday that the professionals showed it down. And people say, why the Dow Jones went down 600 points? It's a consolidation. It went down. So you see from here, it went up there. It came down here. People slowly but gradually they bring it up there. The seller took it back and they sold it down. So people say, why the market is up one day, now it's down the next day, and what's going on? It's the market pattern. Whether you are an investor, a scalper, Elliott trader, Fibonacci trader, it doesn't matter what tool you are using. This is one example here about the truth in the market. There are three market patterns, and we want to work with that. The rising channel, the declining channel, and the horizontal channel. Apart from the horizontal channel, we talk about the triangle, which is also a type of a correction. Those market patterns will always determine the appropriate strategy that one must deploy. And again, here, this is what we see this week. As we were playing with the speculative Elliott count, if one was buying here on Friday, that's crazy. The best strategy, as I always say to traders, oh, priority to bullish signal above and priority to bearish signal below. And people say, Joe, you didn't say anything to me. It means a lot because the price is always acknowledging key levels. And on Friday, where were we? We were at the top of that consolidation. And now, look here. We are now, where are we now? So next week, what's going through the mind of the rational traders? The rational traders will say, well, we must give to priority to bullish signal above which level? The level of 25464. Okay, midpoint target somewhere in the middle there, ultimate target there. Does it mean that the price will go there? No. All they are saying is that we have a market pattern that is a consolidation and one cannot ignore it, meaning that a rational trader cannot ignore the market principle. A rational trader will always work with the market principle. A rational trader will not trade the technical indicator alone. That would be crazy because the price is the number one indicator. A rational trader will know when there is a distortion and he or she may decide not to trade. So when the market is irrational, one can pack his bag or her bag and go away, go on holiday, and not to be part of it because the market is irrational. And most of the time, one can be perfectly right and lose. That's why I say to day traders to pay attention to the gap period. You remember? So the market is open. The first 2 hours is the best time for day trading and scalping, yes or no? So we see all the time when traders, sometimes even TSTW24 traders, I say this, and they apply, okay, a trading system at the wrong time. You can lose. Why? Because the market, this is a very, very important question. Thank you so much for asking this question. The market can become temporarily irrational. So we see that every day the market from after 2 hours when London is open or New York is open, we start seeing those kind of irrational, all right, behavior. When you place a trade, when you and then you end up losing, and then or first This is a very good example. Okay, I hope I'm not talking too long. So one example will be, for instance, did you have that experience when you buy? Okay, you set your stop loss maybe 20 people, 15 people. Okay, all right. You know, you suspect or you have a bit of a idea that the price is going to go up. So you buy gently, carefully. You do everything correctly. You buy 20 people carefully. All right. So what's happened next? The price come down and take you up exactly on the dot at your stop loss. It take you up, take you out of your trade, so you lose. But you bought it, so here it is. So you bought it, you want it to go up, okay? But as you bought it, you done everything correctly. Not that you were wrong, but what the price did, the price as you bought it, the price came down to take you out exactly at your stop loss touch, and then from there start going up. And say, what's that? So they just come to take you out only to go back up. Okay, then there is another opportunity again. You buy again. What do? They take you out again. But then you go up again. That's a very irrational market. What do? After one or two trades, go away, go away, go away. It's a very irrational market. Right? That's why the hedge fund, okay, the institutional investor do not like irrational market, and they don't like retail traders because why? They consider them for being irrational, and they don't understand the market principle, and they're doing all kind of crazy things, and they hate them. That's why they are very defensive also. They have defensive measures in place. So you see sometimes, what do I mean by defensive? I'll tell you one now because the hedge fund, for instance, they have a position open, all right? Suppose here they are selling, okay? Suppose they are selling here, all right? Now, so they sold it here, their initial position was here sell. So price start going down, okay? They have millions of dollars involved. Now, it would be crazy for them to leave it open. They should have defensive measures in place. So one of the defensive measures will be, for instance, as the price goes down, so you sold it here, price going down is here now, okay? Okay, what do you need to do? Well, you can place another orders here to sell. The price is here now. But you can place orders here to say a barrage of orders here to sell. What are you doing? You are protecting your position. So when a price is coming to that position, you will sell it again, putting it down more. That's what you are doing. But you are not manipulating the market. You are protecting your position because those market participants cannot afford to lose billions of dollars. So you understand it now. So I hope I have managed to cover every angle of it. All right. So irrational market, okay, it's a market where the asset price is distorted, and also you see many irrational market participants, people who do not care about the price action. They are trading the indicators. They are buying. Okay. Uh, they are ready to pay. Okay, 10 times the fair value of the asset. That's crazy, all right? Something that should put, they are buying onion for $100. You know that you are in a crazy market. You need to get out as soon as possible. So these are the behavior that you see. There are different type of irrational market. A market can become irrational temporarily, okay, like I told you, the gap period. You may see a distortion building up, accumulation of distortion over the year, and it can come to a point when we see a market becoming completely irrational. It can be the crowd when one sector people believe that it's going to go up forever. It's what's happened to the cryptocurrency trader, Bitcoin trader. They expect it to go up forever. The market caught up with them by correcting it. So the market is 70% of the time, more than 70% of the time, rational. The market hate the distortion and will try to correct it. Even if the distortion, the irrationality is taking place for too long, the market at one point will correct it. So now, how can a rational trader trade in that? Well, with the market principle, if you recognize that the market is irrational, either get out, pack your bag, cut your loss, secure your gain, and get out and come back when the market is rational. That's why we say today, trader, take trade with the professional during the first 2 hours when New York or London is open and pack your bag and go. All right? So you may decide to shut down completely, cut your losses, secure your gain, and go away. All right? You may be so the best approach, be very, very defensive. It's like when you are flying, they'll tell you, secure your belt. It's a bumpy way down. The same thing. You have become defensive, really defensive, meaning that your priority is no more about making money. Your priority is to protect what you already got, which means I do not want to lose. I'm not in the mood to lose. All right, you are cutting it very fine. People say, "Oh, you are not courageous." You say, I'm not here to be courageous. That's all. All right, you are very defensive. All right, and you take defensive measures. All right. The next thing that is so important is that you do not have too many positions open. The first thing you want to do, you want to print your portfolio. You want to have many positions, only few positions open. You know, sometimes you are trading, and then maybe you didn't pay attention to one economy news, and then out of the blue you see a long currency bar. The next thing you must do is to check the economy news. So you go to forexfactory.com, check the calendar, and you see all this news. You say, well, oh, I missed that one. I was not expecting that. So because you see now that you were not aware of this, and now you start losing, you become defensive. What do? You start reducing your exposure. You have many trade open. You see the market is changing, or you reduce your losses. That's what you do. All right. A rational trader is a trader who can recognize irrational market, a trader who understands the market principle, a trader who does not violate the market principle, a trader who is will never buy a distorted an asset with a distorted price. All right. Excellent question. Excellent question indeed. All right. So in the next tutorial, we will be talking about correlation between greed, fear, and volatility. If this video has been truly useful to you, please let us know by giving us your thumbs up. If you dislike it, be sure to mark it down. If you think it's an essential tutorial, feel free to share with your friend on the social media. I always say to those traders, thank you very much for sharing our video. Be sure to subscribe to our YouTube channel. Our YouTube channel is George Trio. George Trio, all right? Be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. All right? So was the market irrational on Friday? No. It was just a market pattern, market rotating, oscillating between two key levels. It's a normal behavior. There was no irrational behavior at all. And also, the market was defensive because of the G7 that was taking place in in France. All right. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how can a rational trader make a decision in an irrational market. Happy trading to you all, and I will speak to you soon. We are recording the video today because TSTWSYS008 trader did ask me, George, would you mind to expand on this topic? How can a rational trader make decision in an irrational market? Have I managed to answer your question? All right. Happy trading to you all.